Hello everyone, this is David Blair, the Crosshairs Trader. In this video, I'd like to share with you a particular strategy that Crosshairs traders use, and that strategy is for trending and continuation markets. The markets basically go through two phases. They go through phases of continuation and they go through phases of reversal. And in Crosshairs trading, we have designed a particular workspace that catches these trends and also catches reversals. In this particular video, we're going to discuss the trend trades. Now, in Crosshairs trading, we study the weekly and the daily charts, and we look for agreement on both of those charts. So in our workspace, we will have a signal that will fire on the weekly chart called a DCH, and also look for a signal to fire on the daily chart called an ITCH, or an itch. And when we get a combination of these two, then we look for it to be a high possibility trade for a continuation in a trend. Now they're green when they're long and red when they're short, and we'll look at both of these as we go along here. We're going to look at several examples of bullish trades and several examples of bearish trades. Let's begin with ABC. ABC, you can see, fired what's called a DCH. It's fired two of them here on the weekly chart. We'll look at the one that's most recent. And the DCH, again green, simply is giving an indication of a continuation of a previous trend. In the workspace, and this is a TradeStation workspace, you can see the DCH on the daily chart. It's programmed on the daily chart from the weekly chart to fire at the same time. So back in October of 2012, a DCH fired on the weekly chart. Now, on many occasions, the DCH will fire on the weekly chart and at the same time will fire on the daily chart. And we'll see that in just a moment with some more examples. But in this example, a DCH fired, and then we waited several weeks for it to also give us a signal on the daily chart. So a DCH fires, there is consolidation in this example on the daily chart, and then a continuation on this daily chart to match the trend on the weekly. What we're looking for again is for agreement in these charts. So a bullish continuation on the daily here is agreeing with the continuation on the weekly chart. Let's take a look at ABC. Or AGN. That was ABC. Now let's take a look at AGN. AGN, as I mentioned previously, this is one that the DCH and the itch fired at the same time, and that will happen on many occasions where there is a long consolidation on both the weekly and the daily chart at the same time. And you can see that with AGN. We had a long consolidation for months. You can see that on the weekly chart as well. We had a few other DCHs here that fired, and you can see the DCH that fires on the weekly and the itch on the daily at the same time to give us another high possibility trade, a continuation of the bullish trend. Let's take a look at another. How about EXPE? Now notice with EXPE that we had a DCH, again a trend, continuation of trend signal on the weekly chart. This was in April of 2012. You can see the DCH here on the daily chart, and then multiple itches that fired over several weeks and months, indicating a agreement on the daily chart with the weekly chart. Next up is FL, Foot Locker. Notice a DCH back in end of 2011, and again we should see that on the daily chart. We have a DCH. We actually had an itch that fired right before the DCH, which will happen. We don't have to have a signal on the weekly chart. In fact, we can just have a trending weekly chart and get multiple itches. But with a combination, again, dual chart agreement is what we call it, weekly and daily. DCH fires, we rest, and then we begin firing the itches on the daily chart that agree with the weekly chart. And as I said, there will be occasion where there is continuations of trends without the DCHs that fire, and we will continue to have those signals also on the daily chart. So that's FL. Now let's take a look at MYL. MYL, again, due to the trend on the weekly chart, had several itches that fired. Again, daily signals, bullish, green. Signals that fired in July, August, September. And then we had a nice pullback and then a continuation of the trend, DCH, on the weekly chart, and then had two continuation trades on the daily chart to match the weekly DCH. TROW. TROW in September 2012 fired a DCH on the weekly right at a resistance level. You can see that here on the weekly chart. So it took it several weeks before it actually broke out also on the daily chart. So we had multiple itches that fired here. It gave a few days of a run, hit a resistance level, continued to go sideways, but we did not reverse a trend. We held this consolidation and then recently fired another itch to match the DCH that fired again back in September. EMN, Eastman Chemical. Again, several itches that fired in July, August, September 2012 in the uptrend on the weekly chart. And then we had a DCH that fired again in October and again in December. But we did not get a corresponding signal on the daily chart until this second DCH fired at the same time with the itch, which again was a good high possibility dual chart agreement bullish trade. So the DCH and the itch fired at the same time, giving us a nice move on EM. How about some bearish trades? Our indicators also will fire bearish trades. These bearish trades will be red, and just like the green ones, there will be a DCH on the weekly with a corresponding itch on the daily chart, and you can see the DCH on the weekly chart in April of 2012, and quickly following that was the first itch. Then we had a pullback and a continuation of that previous trend down. We rest with a pullback and then break again, giving us two opportunities for trades, down trades, bearish trades, along with the DCH that fired on the weekly. And here's another on FSLR, First Solar. Again, a DCH on the weekly chart, which indicated a continuation of the previous trend. We had a pullback, continuation, DCH. DCH fired on the daily chart. And then we have reversal trades that fired on the daily chart to go along with the weekly, giving us again a good high possibility bearish trade. Now, as I said earlier, there's not always a signal that fires on the weekly chart. Sometimes the weekly chart is simply trending without a signal, and we will get a signal on the daily chart to correspond with the trend on the weekly. You can see that recently with Celgene. Celgene had an itch, actually pulled back. You could have got out of this trade if it hit a loss line, and then got into the second one and more than made up for the loss on this one. But again, A nice itch fired. This just happened recently at the time of this recording, beginning of 2013. You can see this nice itch that fired. Bullish itch, again green, corresponding with the trend on the weekly chart for Celgene. Let's take a look at a few others on the daily chart. CVS. You can see CVS firing a nice itch here after a DCH on the weekly chart. DCH it fired in December, and I had a nice pullback and then a continuation of trend with the itch, again green for bullish. How about HON? HON again fired an itch here and an itch before the DCH pullback and another itch that fired for again a continuation of trend. How about Terex? Terex again, another one where the DCH fires at the same time with the itch and then fires another one as well. Again, dual chart, Crosshairs dual chart agreement. How about Win? Win without a signal on the weekly chart. However, it's a nice trend higher on the weekly chart. Gave us a nice itch to the upside for a nice trade on Win to correspond with the weekly trend. So again, a dual chart agreement. How about a few to the downside? Let's take a look at a few that fired to the downside. Oxy. You can see multiple times in here where we've had up trades, down trades, up trades, down trades, and with all of our signals and any signal that anyone teaches, any pattern that you're going to look at as a trader, there's always going to be the opportunity for failure. They will not always work. The market just does not work that way. So when we look at Oxy, you can see several times where there were trades that did not work out. That's why we learn how to draw loss lines and take losses when deemed appropriate. If you'll notice in these signals, there are horizontal lines. These are conservative and aggressive loss lines that we teach in the Crosshairs trading strategy. Let's take a look at a few others that sometimes work and sometimes fail. If you'll take a look at Dell, for instance, DELL, you can see there was a DCH at the beginning of 2012 that failed. Actually never gave you a signal on the daily chart, but the DCH failed. Then there were several occasions in the downtrend where a nice itch fired that corresponded with the downtrend on the weekly chart. And we got these itches. This one worked well, this one worked well, this one worked well, and then this one failed. They do not always work. Again, that's why we have loss lines for our signals. How about another one? How about MON? Sometimes they work and work well. Sometimes they'll fire with a DCH, such as Monsanto here. Failed. Many times it may have to do with bad news. It may have to do with general market conditions. But then you have another itch that fires. DCH fires, it pulls back, but it continues the trend. And another itch that fires that was very successful. Again, they do not always work. I would be doing you a disservice if I gave any indication that I have any kind of strategy or system that works 100% of the time. That's for those out there who are gurus and who want to take advantage of those when they are weak. I teach how to take losses when a trade does not work. I'll show the good ones and the bad ones. Here's a DCH and an itch at the same time. What did it do? It failed. Here's a DCH and an itch. that succeeded. Again, multiple DCHs, some of them work, some of them don't. Again, we learn how to trade those. How about ENDP? Nice bearish trend on the weekly chart. We had a nice one that worked back here in October, had a nice down pullback, an itch that fired for a nice multi-dollar move on ENDP. And then we recently had another itch that fired. However, it has reversed and broken the loss line that we have here, both the conservative one and nearing the aggressive one for a loss. Let's take a look at MDR. One more example here. MDR gave a couple of itches. Nice trend down a couple of times. Had a nice move on the trend down. Actually a consolidating market here that pulled back again on the weekly chart. However, you can see on this occasion there was another itch in this last down, an itch that worked really well, and then an itch that failed, actually broke the loss line. So multiple trade opportunities and multiple opportunities for us to work on our discipline, not only to enter trades but exit them with small losses or really good gains. And that's what good solid trading is all about. Now what we just went through were just the signals in the Crosshairs workspace so that you could easily see the dual chart agreement between the weekly and the daily. In the workspace, I've also included studies on moving averages and dual chart agreement with the moving averages superimposed upon the daily chart along with the signals. In other words, the moving averages we look at on the weekly chart are superimposed and also listed on the daily chart as these dots, the dotted lines here. The daily chart has the solid lines. The blue signals you see here are certain moving averages that line up in a certain way that we study that correspond with and work with the signals. Also in the TradeStation workspace that I've developed, there is a radar screen, and this radar screen will give you an indication of when there is a trade based on the stocks that we look at. I've preloaded the radar screen with almost 600 symbols that allow you to trade the stocks that have the highest volume and that are optionable and are over $10 a share. So all of that is already preloaded. I have some daily signals that fire and some weekly signals that fire. That's part of the instruction. And basically what I want to show you is how the radar screen will give you an indication of both a trade on the daily and the weekly chart, the dual chart agreement that we've been discussing. Take a look at AGN. One of the examples that I gave previously, AGN fired an itch 9 days ago. You can see that here. At the same time, underneath the weekly column, you see that it fired a DCH 3 weeks ago. So 3 weeks ago, we had an LO1 here and an LO1 green, again an L for long, firing at the same time on both the daily and the weekly chart. For instance, let's look at one that's firing right now. Let's take a look at STZ. STZ fired a DCH signal. It's fired a couple of them. And this is a line that I use in instructions, so let me move that out of the way. We fired a DCH back in July, gave a nice move. However, we pulled back, and now we're working on a continuation of trend on STZ as of this week. DCH fired 3 weeks ago, and you can see that on the daily chart. We've got some green indicators here with the moving averages letting us know that the moving averages have lined up bullishly the way we want them to line up. And now we've got an itch firing, and you can see that in the itch column, LO1, that's firing as of today. Here is one that does not have a DCH firing but has an itch that is firing, and that's CAM. And again, you can see that it has fired several itches with pullbacks over and over again along a trend. And again, you can see a move up on the weekly chart for CAM. That is a quick overview of how the TradeStation workspace, Crosshairs TradeStation workspace, performs for those who are looking for a good, solid platform and trading strategy to find continuation of trends and good breakout trend trades. If you've got any questions, please contact me at david@crosshairstrader.com. You can also go to my website, Crosshairs Trader, and check out to the right hand sidebar. You will see an indication of CTU, and CTU is my 3-month course, live trading course, where I teach you how to trade into Crosshairs and how to use Workspace. Thank you for your time.